Hello, everyone, and welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just do a disclaimer. Nothing on this video should be construed as financial investment advice. It's just my opinions and my thoughts on the market and what's happening. So, yeah, anyway, let's just get into today's stuff. I haven't done a video in a while. Let's see, where's share my screen. So first off, let's do today's economic data. I haven't done the last couple, so we'll get up and see where that is. Dallas Fed Manufacturing Index right here, that was negative 17.5. That's really, but if you look at the home prices, S&P K Schiller, that was up 1%, and year over year 6.8%, which actually is good because you look at how these and JOLTS, the job openings, 8.18 million above consensus. So this is mixed to positive. And but the Dallas Fed Services Index, that was down 0.1%. So this is mixed to positive, and you have to look at it. What really is driving sentiment among the boomers is higher home prices. It's hurting everyone else, but it's maybe Gen X might benefit some, but yeah. So anyway, that's Tuesdays. Let's go to Wednesdays. And if you look at it, ADP employment consensus, that's not good. 122,000 jobs created. That's private sector. The jobs numbers, though, they'll probably add excess government or count part-time, but the ADP does not look good. Chicago PMI, that was negative again, 45.3. But then pending home sales on a month over month, that declined. That was increased by 4.8%, and the pending home sales year over year down 2.6%. So yeah, as you can see, this is mixed data sort of. The Fed interest rate decision, looking at this, still 5.5%. I think they're going to do a cut in September. And I think that's sort of now let's look at the markets here. If you look at the Dow, that was up $99. S&P up 85. So that's quite a divergence that it was not really up that much. Now, going back to oil, this reminded me, yeah, we're going to see mixed to strong economic data because two reasons. The strategic petroleum reserves, and that did two things. One, selling that counts as economic activity. Releasing, I don't know exactly where, I just remember the article, but it did count as exports and GDP. It generated sales, economic transactions. Maybe it's in the retail sales data. I don't know exactly, but yeah, it will, from based on what I know, count as economic data. And looking at it here, oil 78.64, just those 6 months. It was released around here. And this was done, as you can go back to older videos, on a month by month basis, all the way up to August, I believe. And you can tell from 86, it's really gone down. This is subsidizing the vacations for the wealthy, affluent class so they can spend. It's indirect welfare. That's really what this releasing of the strategic petroleum reserves is. So they can go on nice vacations and not break the bank. But if you look at the working class and middle class, they're not vacationing because they still can't afford. But anyway, this is it's not a direct welfare, in my opinion, like getting a check from the government, but indirect where they're selling so can afford to travel or drive or whatnot. So, and yeah, so that's if you look at receive breaking energy, but if you look at the oil price 77, But I mean, the rate cuts and everything, if you look at it, go to Kitco, gold is not being fooled uh, by this. And you can tell it's mixed, not even though it's mixed to good. Gold had a strong day. And as you said, it's basing, it's getting ready to go to 2,700 to 3,000. 29. Look at the day, 2% today on silver. And it's basing, it's getting ready to really break out on the 30. A lot of that is coming. And one other thing I wanted to show. Oh yeah, look at some of the GDX. So the miners, you can see 2.65. That really had a nice day. And then the gold juniors, they're not really juniors, but 1.35. And you can tell my target on the GDX. You look at it, just do max. I think it's going to play catch up around 57, 58, 62, somewhere around there. And just do silver miners. Where is it? SIL. Looking at silver miners, that's doing well too. 93. SILJ. Look at that. 43 cents. That's doing pretty well. So anyway, let's just go into a couple of news things that I brought. As you can tell, banking crisis is coming soon. Warren Buffett. Now, I've been covering this, and there's more news to cover. Warren Buffett sells Bank of America for ninth straight day. This is yesterday, July 30th, as you can see right here. Berkshire Hathaway's selling streak in its Bank of America stake has extended to 9 straight days. Maybe it's 10. I don't know. I didn't see. After the selling spree, Berkshire still owns 96.16 million shares. So still largest shareholder. They're putting their spin on it. He's still the largest shareholder, 12.3%. They're not telling the truth. Like he wants to dump, and so he's probably told the press. I'm just speculating to keep talking up the bank so he can dump them. So selling streak, 9 straight days. Buffett is not just trimming the long time hold, suggesting that Buffett's not just trimming the long time hold. Wow. So there it is. So, but if he continues to offload his shares, could fall below third place American Express. So he's probably trying to dump that too, or maybe that's what he's going to dump next. So he has 2 business days to report any transaction, so we won't know until Thursday. So yeah, won't know until tomorrow. Bought it in 2011. So yeah. Cost basis $14. Closed at 41. So so here it is, putting their spin on it. Could be taking some profits after the strong run culminating in a big year. 22 stock has rallied 22%. So there you go. It's never like, what is he? Does he know something that we don't know? He was selling banks before Silicon Valley. So anyway, that's Warren Buffett selling banks. Beware. So and then here's another one. Congressman Buddy Carter sells up to 1 million in Ameris Bancorp before earnings report. What's behind the news? So Congressman Buddy Carter, Georgia's first district. Uh, uh, Sale between 400,000 to $1 million worth of prompted questions about any inside info regarding the bank's financial performance. Well, if he is, he's not going to get in trouble for it. But me and you listening, unless you're one of the bankers, there's probably some powerful people listening. But most of you listening, regular common people, we get a tip, we know something, and we make a trade, boom, they throw the book at us. So, but this guy probably. So, despite downward revisions in earning estimates prior announcement, the better than expected results. Had he held on to his shares, yeah. Desire to avoid risk and insider knowledge. Yeah, yeah, right. Maybe he wanted to get out before. So anyway, that's all, Congressman. So Buffett selling, people in Congress are selling the banks, and more news. Regional banks are now willing to take billions in losses. Let me see. They're probably going to try to put their spin on it. Taking steps that was unthinkable more than a year ago. Selling underwater bonds at a loss. So there it is. So they aren't selling lower yielding securities to pay depositors. Instead, they're preparing for interest rate cuts from the Fed. So some cash of these sales are being used to buy new bonds that the lenders hope will perform well as rates come down. Like, yeah, right. Like who believes this crap? They got extra cash. Bank treasurers who think they're top of the cycle may decide to go ahead and lock in long duration. So once in a lower rate environment, they still have a decent yield. So yeah, it's like, why not just hold on to the bonds you have? Generally speaking, when you drop rates, current bonds go up because they're yielding. So yeah, why don't they? Yeah, like if I were doing this, not financial advice, just my opinion. If I had these losses and I knew they were going to go up significantly because the Fed was going to lower rates, I mean, the only thing is they would sell. Just wait. Like you already have huge losses. It goes up. It's probably a small loss or break even or whatnot. And even if then, so regional banks, PNC took 500 million in losses on its bond sales and reinvented the proceeds into securities with yields. So yeah. I mean, I don't think the Fed's gonna cut all that much. And if it does go down to zero, when does it ever go down to zero? Because it wants to. It goes down because it has to. It would reap the amount of net interest. So I would love to know if this is really like what they disclosed. Decision to realize bond losses didn't impact earnings, thanks to a one-time stock gain reported from its Visa holdings. Banks are choosing to take these losses when they're able to when they aren't able to offset them with quarterly gains. So yeah, I don't regions took 50 million pre-tax loss to replace approximately $1 billion of bonds. So of course the only reason going to an asset class is because you think, like in my opinion, this is just my opinion, not advice. Let's go to miners. This company. Let's say I have losses and where's Barrick Gold? Are we going to sell this theoretically Barrick Gold? It would be to buy. And let's say it would be to buy Anglo Eagle. To say Anglo Eagle Mines is better stock. None of this is financial advice. This is just my opinion. The reason why I'm selling Barrick is I don't have faith in it. And that's probably, I'm looking for a bag holder. Not because. So, like, what they don't talk about and what they didn't ask is, well, why not just keep those bonds? Obviously, they probably think, in my opinion, those bonds are junk and they're crap. And they're looking for a bag holder. That's just my opinion, not advice. So anyway, that's all I have for today. That's all I have for today. Hit that like button, subscribe if you haven't, and I will see you next video.